Hey family, it's CJ Investing here, and I just want to take a look at this article. I'm just kind of do a week's review of everything that really went on this week that was kind of significant. So we had a pretty crazy week. It was pretty down. The market, so the stock market rally under pressure as Walmart Target crashed on inflation woes. Weekly review. The stock market continued to slide in another wild week. The major indexes all staged follow-through days to confirm the new market rally on Tuesday, but sold off furiously on Wednesday. Walmart and Target crashed on weak earnings and guidance, with both citing cost pressures, as Target also noting a shift from discretionary items that not only rock discounters and retailers generally, but trucking firms, Apple, and even food producers, which tend to be defensive names. Cisco Systems tumbled Thursday on weak revenue and guidance. The Dow Jones undercut its May 12th lows on Thursday, ending its rally, but the Nasdaq and S&P 500 rallies are still alive but under pressure. Stocks continue to slide. The major indexes confirmed a new market rally on Tuesday, but a sharp sell-off put the uptrend under pressure right away, with the Dow soon undercutting its May 12th lows. Ultimately, stocks extend long week losing streaks. Walmart and Target dive on weak earnings and outlook, rocking other retailers in several related sectors as hot inflation raises costs and curbs demand. Kohl's and Ross stores were among other retailers with poor results and guidance. Cisco and Applied Materials blamed supply chain woes for weak results and guidance. Treasury yields retreated on economic growth concerns. A lot of companies were having bad weeks regardless of if they reported bad results on their earnings calls, things like that. Inflation slams retail. Titans Target dropped 25% after it was caught off guard by much higher than expected freight costs during its first quarter and underestimated a slowdown in demand in core categories, leaving it with TVs, appliances, and furniture that it couldn't sell. That marked Target's biggest decline since October of 1987, since before a lot of us was born, that's insane to me. And that came after Walmart plunged after citing unexpected food and fuel costs, overstaffing, and signs that some grocery stores were switching to cheaper brands. The results in the weak guidance raised questions about smaller retailers' abilities to handle their own costs. The Walmart and Target reports triggered major sell-offs among retailers, trucking firms, food product makers, and more. The economy holding up as the Fed wants slowdown. The economy isn't slowing down fast enough to satisfy the Federal Reserve. Strong retail sales and industrial production data for April made that clear early Tuesday, and Fed Jerome Powell hammered that message Tuesday afternoon. Powell cautioned that there may be some pain involved in restoring price stability. While he's holding out hope for a softish landing, Powell said that the unemployment rate could go up a few ticks before the Fed is done. He said it would take inflation coming down in a convincing way for the Fed to stop hiking interest rates. Thursday's bump and new jobless claims might indicate the start of the labor market softening, but claims are historically low. Cisco dies on weak guidance. So it reported Q3 earnings rose 5%, edging past views, while flat revenue of $12.8 billion slightly missed. Product order growth slowed to 8% in the April quarter versus 33% in the fiscal Q2. Cisco stock plunged on weak guidance as management blamed China's pandemic lockdown for worsening supply chain issues. For the current quarter ending in July, the networking giant forecast EPS of 80 cents versus views for 92 cents. Revenue should fall 1% to 5% versus consensus for a 5.9% gain. So to Twitter and the Elon Musk situation. So can't delete this deal. Twitter's board unanimously recommended that shareholders approve Elon Musk's bid to take the social media company private at $54.20 a share. The board effectively ignored Musk's earlier statement that a deal was on hold pending his demand that Twitter prove that less than 5% of the tweets come from bots or scammers. Musk seems to be seeking to back out or renegotiate his offer. Twitter fell sharply again amid deal concerns. Tesla stock fell amid the Musk Twitter saga. So, fertilizer and lithium play SQM demolished Q1 earnings or estimates, posting a nearly 1,000% rise in EPS to $2.76 as revenue nearly tripled to $2.02 billion as a strong fertilizer market has been. SQM's results were driven by lithium as sales vaulted to 1.45 billion from 135 million in the year-ago quarter, with its lithium prices lagging market prices by 3 months. Q2 should show solid sequential growth. SQM cleared a 90.97 buy point from a 6-week consolidation, but SQM is well above its 50-day line. Home Depot, Lowe's earnings top. Home Depot delivered a strong spring quarter and raised 2022 guidance, while Lowe's merely maintained guidance despite a sizable earnings beat. Dow, Giant, Home Depot disclosed a 6% EPS gain and 3.8% revenue gain. Defined views for declines. Shoppers haven't pulled back yet, Home Depot said, but the home improvement giant is watching the impact of rapid inflation on consumer behavior. Lowe's blamed a revenue miss as cooler spring hurt DIY sales, which account for 75% to 80% of its business. HD stock rose on earnings but fell for the week. Lowe's also declined. So I own Home Depot in my Roth portfolio, and I don't think Home Depot or Lowe's, well, none of these companies really were justified for dropping like they did. Even with them producing bad earnings or quote unquote bad earnings, I don't think the fall was justified, but it's a full on market crash that we're in. And they're subject to losses just like any other company. So Lilly gets sugar high from drug okay. The FDA approved on Eli Lilly diabetes drug, with the agency saying it's more effective than other therapies. Moderna, excuse me if I'm pronouncing this wrong, targets 2 hormones to improve blood sugar levels, while rival treatments only target 1. Lilly is also eyeing the drug as an obesity treatment. Lilly stock rebounded from its 50-day line Monday on news, briefly flashing on early entry. Shares fell below their 50-day line on Thursday, but recovered that level on Friday. Lilly and Incyte drug Olumiant got an EU panel's recommendation for regulators to approve it for the hair loss disorder alopecia areata. Kohl's reported first quarter results that missed expectations, with EPS falling well short. The department store chain, which is looking for buyers, also announced 2 key executives left. JD.com revenue rose 18% in Q1 to $37.8 billion, with the Chinese e-commerce giant beating expectations despite China's lockdowns. Lockdowns will have a bigger impact on Q2 through Shanghai's is starting to ease restrictions. BJ's wholesale top forecast with a 21% EPS gain and 16% sales rise. Shares of Warehouse Club operator jumped on results, but fell sharply for the week as retailers sold off hard. TJX costs topped earnings views through the off-price apparel and home goods retailer missed on sales. Shares rose. Off-price apparel chain Ross Stores crashed after missing views and guiding lower. So Deere, which in John Deere, reported stronger than expected first quarter earnings and EPS guidance, but the farm equipment giant fell solidly. So that pretty much tells you that no matter what earnings that these companies would have reported, that they still would have fallen. It's not necessarily based on their earnings. It's just the fact that we're in an actual market crash, and a lot of these giants and a lot of the safest stocks in the stock market are falling. But the fact that some of them did report quote unquote bad earnings, it made their stocks fall even more. It just added to their losses. So I guess if they would have reported good earnings, they just would have failed as much. And that sounds crazy, but that's just the market that we're in right now. And I think it's necessary. I mean, there's a lot of deals out there. You don't have to look very hard to find deals. And you shouldn't be sad or emotional about it, especially if you're a long-term investor. As us long-term investors like to look for the deals in the market. And right now, it's a whole lot of deals out there. So if you're a long-term investor, you should be glad about that. I mean, we don't day trade or none of that other stuff around here. We focus on the long term. We buy stocks for the long haul. So I'm going to be buying in the coming weeks. So I hope y'all have a blessed rest of your day. Thanks for tuning in once again to my channel. I drop videos like this on a weekly basis. At least I try to drop at least 2 a week. So stay tuned for more content like this. I'm going to be covering these type of articles and just showing which stocks are on my watch list and giving my thoughts and opinion on those. So I love y'all. Continue to strive for greatness, and I'll see you next time. Peace.